Good evening, everyone, and welcome to Crypto Pulse Weekly. Our background's a bit different today because I've been down for most of the day and doing stuff. I just got myself back to the computer this evening, so I'm just going to run through the news items that I highlighted that I wanted to share directly from the source, and then I'll talk a bit through what I think we need to consider as either investors or traders at this time. So let's get started. The first, of course, is the interest rate story. You probably have heard about that. And what's going on with that is that the Federal Reserve Bank of the US have increased interest rate to the highest level in 40 years. I've explained this in times past, but just for the purpose of anybody that just listening to this for the very first time, what they have done is they've changed the cycle, they reversed the cycle of money flow. So as I always explain it, the money flows from the government who prints money, either as credits, well, usually as credit in the days of digitalization, as credit to borrow governments or to borrow commercial banks, who in turn then borrow individuals or corporates for the purpose of production and growth. So every time the government prints money in abundance, they essentially diluting the circulating supply of funds. That money finds its way into what we call risk-on assets. Risk-on assets are things like stock, equities. Crypto is considered as risk-on asset as well. And then they start to get crazy valuations because there's a lot of money to go around. However, like I've always explained, if the money printing becomes too much and then you have an oversupply of funds, you have a situation where there is inflation, which is what they're talking about now. And the inflation is such that there's more money than products can buy. This can lead to a problem if it is not curtailed, because it might make money very useless very quickly. So to stop that, Federal Reserve Bank will usually increase the rates, which in turn increases the rate of borrowing and then reduces the circulating money supply. That reduction in circulating money supply is a reverse engineering way of turning off the tap of money flow. And when they do that, it starts to take effect on the market. And that's exactly what's been happening. This is a particularly unique one because they took the opportunity of COVID to print insane amounts of money. Like I said, 25% of all circulating supply of US dollars was printed during COVID. So it means if there was $1 billion US in circulation all over the world, 250 million was printed during COVID alone. That's 25% printed within a 24-month period for a currency that is over 100 years old. So that's a lot of increase in a short time. And that's what's manifesting as the hyperinflation and inflation we see on the markets. At the back of that, we now have all these issues of supply chain. You have the war in Europe. The war in Europe has continued to drag on. Now that Europe and the rest of the world are trying to cut off Russia too is trying to cut them off by trying to cut deals with some of the countries that Russia and Europe is trying to get alternative energy from. So yeah, what you are seeing this week of Bitcoin getting to 20K, which is pretty much the all-time high of the last cycle, is as a result of this. So this is the first one. The second one is what I would call corporate liquidations. So unbeknownst to most of us, personally, I mean, I didn't know, for instance, many of the crypto companies or crypto hedge funds were highly leveraged in their position. What does that mean? It means that they borrowed money from other parties to take positions on the market. Now, if you have money on leverage and you have a position, that money on leverage will run out at certain points, which is usually known as the point of liquidation. So what has happened to Three Arrows, or Three Arrows Capital, or 3AC as they're called, is that they did have leverage positions at 1,040, I think, for Ethereum. They had tons of Ethereum. And well, either by design or by intent, the market went down to, to their liquidation point. Now, that has spiraled off a number of things because one, it has liquidated them out. So they've been forced to sell at a loss. And I mean, there are so many people's funds that are locked with them. And they also have many people's funds, like many crypto platforms funds in those positions. So right now, they're affected. Nexo is affected as well. So Nexo, where is Nexo? I have a news on Nexo somewhere. Yeah, where is that? 20%. Nexo is affected because some of the coins belong to Nexo. So Nexo is like a platform like CRO, but they have a lending solution. You have they operate like a crypto bank essentially. So now, because of this liquidation, they're going to have to pay back some debt immediately. But what this means is that the overall market capitalization of crypto that has been lost because of or significantly lost because of everything that's happening and because of the Luna debacle, this one has now complicated it. In fact, these guys are not the only ones that are affected. There is also Celsius. Celsius also has a lot of leverage position in DeFi platforms. And as a matter of fact, if you have Celsius, you'll notice that they've literally blocked, they've blocked withdrawal. Some other smaller platform had done that way before. I used to have a particular coin called Crypterium, and it was supposed to be like, you know, a really fantastic project. And then it just started feed dragging. Then I think sometimes during the beginning of the year, I tried to withdraw. Maybe I had like £100 or something. I tried to withdraw it. It didn't go. I couldn't withdraw anything from it was just saying, talk to the administrator. I'm like, oh my God, these guys are gone. So Celsius is in the same position. Their own liquidation is on Bitcoin. The position is on Bitcoin. I understand it was at 19K before. It was at 20K. Then they moved it to 17 by adding by paying back some of the loans to reduce the margin. I understand it's now at 14K or 13K thereabouts. What am I saying? We are seeing a lot of liquidation of corporate entities, not just private entities. So usually, when you say the capitulation events happen, when I was talking about capitulation event back in May, it was mainly around retail traders and large whales. But what we're seeing is that many of the corporates are also in leverage positions, and when you're in a leverage position, you can only hold that position up to a certain level called liquidation points. After liquidation, you are forced to sell that position and lose that money. So that's what's happened with Three Arrows, unfortunately. That has caused a lot of panic. Like somebody said, that the panic is even more, bigger than the Black Thursday panic that you have on the stock market. A side note about what can you do? Because a number of people have asked me, a number of stuff that, okay, what do we do with this crashing market? Do we sell all to stable coins, or do we hold? What exactly do we need to do? So two things. Like most of you, I was holding many of my portfolio thinking I was going to sell off at a flow of top and make some cool money. But now that that's not possible, we need to re-strategize. And part of the re-strategization was what I mentioned a few weeks ago, which was try as much as possible to exit your low-cap alts into Bitcoin. And I said Ethereum at the time. But I'm going to share something that's very disturbing about Ethereum today. Um, uh, Frankly, I'm going to say, you know what? You're better off selling off your Ethereum to BUSD or some or fiat on Binance. So in Binance, you can sell your Ethereum to fiat like US dollar or euro or anything. And I'll tell you my reason very shortly. This session is not going to be long because I have to take my family to a family friend's birthday party. Anyways, there's a lot of stuff still looming. This was the news I was looking for. That's the contagion of fears around the liquidation of Celsius. The same thing that has happened to Three Arrow Capital. People are fearing that this is going to happen to Celsius as well. As a result of that, it's affecting people, platforms that people know have money with Three Arrow Capital, and Nexo is one of them. As you can see, it lost about 40% in a single day because of that. That's pretty much, you know, the narrative today. Same thing with Tron. Tron also crashed because their, what's it called, their stable coin was depegging. Depegs. This depegging is a very funny word. Anytime I say it, it makes me laugh. Basically, what it means is that the stable coin is no longer stable. It has become unstable, like potassium chloride. Chemistry. It has become unstable. And as a result of that, it cannot fulfill its stablecoin status. So it dropped from, I think it dropped like 20% originally, then 30%. And because the USDT is strongly related to the Tron cryptocurrency, which is TRX, it just started dropping. And then people started, you know, bringing up tweets that look like, what's his name? Do Kwon's tweets, that it was Justin Sun that was making those tweets, and everybody was running into panic. It did bounce back. I remember it bounced back, I think it was Wednesday. It bounced back, but the picture was not good. Frankly speaking, it was really bad because the USDT was depegging and was losing its one-to-one ratio. So that's also contributed to some of the gaps that we saw in the markets this week. In terms of regulation, there was this about the SEC when they came out and said that the new crypto bill looks like it has a provision that will undermine financial protections. While I agree to this in principle, it's not. It looks good on the surface, but the intent is wrong. I can't really go into it. I don't have time to go into it today. But I understand what Gary Gensler is saying. Gary Gensler is a Bitcoin maximalist. So he will do anything and everything possible to make sure that anything else apart from Bitcoin is not doesn't see the light of the day. So I think that's going to affect the bill that was put forward. In terms of the crash as well, many people have been talking about Michael Saylor, and I remember her responding to somebody on Twitter to say that Michael Saylor does not have a problem. He's not leveraged. So unlike Three Arrow Capital and Celsius, Michael Saylor is not leveraged. Michael Saylor, they are buying based on spots, and they are not, how do I put it? They are not buying to take the position. So when you take a leverage position, you are taking a position with a broker. They are buying, they are borrowing to buy. So they can afford, this company can afford to keep servicing the debt on that borrowing, on that purchase for the next 5 years. Because in the next 5 years, Bitcoin will be double digits. And what am I saying? Bitcoin will be 7 figures, or how many figures is it now? Sorry, just 5 figures. So Bitcoin will be 6 figures in the next 4 to 5 years. So by that time, it can afford to refinance the loans that he had, that he used to buy Bitcoin now, and repackage it, take the new loan, because Bitcoin will have a new valuation by then. Take a new loan, wipe off this existing loan, and get a better deal. It takes I don't want to use the word genius, but it takes somebody that understands finance, business, corporate governance, and crypto to be able to pull off what he has pulled off. But people don't understand it. People think it's in the same position like Celsius or like Three Arrow Capital, and that once Bitcoin gets a particular figure, his position is going to liquidate. No. The money they've used to buy Bitcoin is backed by the equity of MicroStrategy as a company. So as long as the company is running, which it is, and they run a subscription for the most part, like many other software houses, they run a subscription model. So money is coming in every month from subscribers who are using their software. So they will be able to weather the storm regardless. They will be, in fact, what is that? Yeah, I think it was this one when they were saying that people are saying that they were going to have a margin call, that because they have borrowed money to buy their 129,000 Bitcoin. But what the guy was saying was that they don't have any margin position. They borrowed money to buy spot Bitcoin. So it's like saying, I went to the bank, I said, bank, give me 100,000 pounds. Then I bought Bitcoin at, let's say I bought Bitcoin at 50,000. Now Bitcoin is less than half of that value. I have another means by which I'm paying the bank my monthly, let me say, okay, let's say I said, okay, I'll be paying the bank monthly, let's say 500 pounds or 200 pounds for interest. Now, I'm still going to be paying the bank interest because I have a subscription platform that is making money that pays off the interest. So they don't need to liquidate their Bitcoin to service any loan. All they need to do is pay the interest on the loan for the next 3 years, and they're fine. So everybody was looking at them and saying, oh, MicroStrategy is in soup now. And the guy was saying, see, we don't have to sell any of our Bitcoin. We are not in leverage position. We have leveraged our company to acquire Bitcoin as an asset. And I was having this discussion with somebody during the week. And I'm bringing it up now because a lot of people have been disturbing me and a lot of people have been worried, especially about their crypto portfolio. I'm going to say this to you, and I mean, for the purpose of those who are watching on YouTube, I'm going to say it as well. Understand clearly that Bitcoin is digital real estate. If you have a house in central London that is able to yield you £500 per month cash flow after all deductions, if you need money, you're not going to sell that house because that house is not only an asset, it's also cash flow. You're not going to sell the house because it doesn't make sense to sell the house because you need money. You rather take a loan against the house, sort out your cash flow issues, and keep the house. So whether Bitcoin goes to 7K, like some people have said, or it goes to 3.5, or it goes to 5,000, it does not change the intrinsic value as digital real estate. Will it reduce your portfolio size? Yes. Does it matter in the long run? No. We roughly have 2 years of bull run, 2 years of bear market historically. So if you say 2021 and 2022 and 2023 are bear markets, then we can definitely say that from 2024 the market will pick up. But you understand that if Bitcoin were to drop to, let's say hypothetically 10,000 today, and you had one Bitcoin at 50K, it dropped to 10,000, and you were able to buy two, just hypothetically, or you're able to buy, you're very worded, and you're able to buy 4. So you now have 4 Bitcoin, which you bought at 40K. The original one Bitcoin, you bought it at 50K. Now you have 5 Bitcoin, one at 40K, the other 4 at 10K. Those other 4, total cost is 90K. 90 divided by 5 is less than 20K, your average cost. What it then means is that once Bitcoin starts crossing back on the other side of 20, you're already in profits. So understand that even though it's not a palatable thing to look at your portfolio and look at value get drained out of it literally, this is life-changing money opportunity. Like I told someone else, I'm not going to say it too much because I'm also trying to increase my hustle so that I can stack more, because you're not going to get this opportunity again. In fact, there was a news I didn't pick that was saying that there's a report that's showing that wealthy people are secretly accumulating crypto right now. And of course, nobody's going to come on the news to say they're accumulating crypto. But there is that research that shows that a lot of wealthy people are secretly accumulating crypto right now because, of course, the prices are down. They know to buy the blood. People who have gotten wealthy by equities and all that, they know that when the market is red, is when you want to buy. So they're out on a shopping spree. So understand that we also need to be out on a shopping spree. I mean, maybe not, buying everything and anything, but at least making sure that we're stacking steadily on Bitcoin. It's very important. I said I was going to talk about Ethereum. I'm going to come to Ethereum. There was this news I wanted to talk about stablecoins. The reason stablecoin is dropping is very simple. Stablecoin is dropping supply because people are trying to cash out and are trying to move into risk-off assets like bonds, government bonds. So as long as this is happening, we will continue to see a drop in stablecoin volume. In other news, you have Yahoo launching metaverse for Hong Kong residents. They're offering them basically virtual experiences for programs. And then you have this report by McKinsey saying the metaverse could be worth 5 trillion in 2030. The reason I'm talking about this is because while all this chaos is going on, we still are having adoption creeping into the overall story. So at the end of the day, even though the prices are going crazy and everything seems to be going mad, things are still going on in the industry. Things are still going on in the background. And of course, I'm sure you've seen this. Okay, not this one. This one's about Celsius, about the withdrawal suspension. Of course, Celsius will have to block everybody from withdrawing. Otherwise, people are going to liquidate them. In fact, they won't need to be liquidated by their Bitcoin position. The withdrawals of their users will liquidate Celsius because everybody now knows they have a problem. So they can't allow everyone to withdraw. It's just like people running on the bank. They're going to finish them. So these guys are just going to add to their problem. This Texas SEC. Anyways, you've probably seen this guy suing Elon Musk for 258 million. 258 billion. He wants to collect the whole of Elon Musk money. Anyways, he's suing Elon Musk for shilling Dogecoin and says that he used it to profit himself. I don't know how far that's true. I'm sure that will just drag on for a while till everybody's tired. In another news, talk about fear and greed index. I've always said it, that anytime fear and greed index is less than 10, it's a good buying opportunity. I stick by it. I expect it to go to probably 5, but I stick by my assessment that anytime fear and greed index sits below 10 is a good buy. It might still go further down, but this is a lifetime change opportunity. In fact, the only time it's been here has been during COVID when it went to as low as 5. So if it goes to 5, then we might start to see some sign of some relief rally or recovery. So in terms of what I wanted to say concerning Ethereum, that's actually the main technical stuff I wanted to talk about today. I looked at it briefly last week, but I think looking at it again this week gave me some worries. So this is the daily chart of Ethereum, which looks likely the same to the weekly chart. What we see here is that it's not only breaking structure to the down. So when it broke down 1007, it broke a previous low, the previous low from last year. Since it broke that previous low, it's just been going down, down, down. Now, based on fib levels, what we're seeing is that Ethereum is going to 483. As a matter of fact, I think the floor price will be like 483, 490 at the end of this drag. So what does that mean for the Ethereum holder? Well, 2 possibilities. Yes, I know that Tika is saying acquire Ethereum, but what I'm saying is you are faced with 2 possibilities. I know for sure from what I can see on this chart that Ethereum is going to hit 490. I'm not saying jump your Ethereum and scream Hail Mary. No, what I'm saying is be prepared to see get to that level. If you can hold to that level, oh, well and good, you're fine. If you can't hold to that level, then sell what you have and buy back at 490. It's not a financial advice, of course. I'm just telling you pure technical analysis, unbiased technical analysis. Ethereum has been underperforming Bitcoin since the last 6 weeks. Let me try and see if I can pull up that chart. It's been underperforming Bitcoin, and what that means is that altcoins are going to suffer. Of course, what's it called? What's the name of this thing? Bitcoin dominance. Bitcoin dominance has been rising, meaning Bitcoin has been gaining more and more on other altcoins. So again, this is the chart of the strength of Ethereum versus Bitcoin. You can see the highest point Ethereum got was 0.15, and that was 2017 peak of the bull run. In the peak that we had, it didn't even get to 0.1, which is incredible. That was December, yeah. That was peak. December 6th of December was 0.08. Since that time, essentially, we've been in a downward spiral. What does that mean for Ethereum? It means that in the near term, we've run the course already. In the near term, Ethereum is likely to stay down. It's likely to stay in this region, 0.493. Yeah, it's likely to stay in this region for a while. But I'm almost invariably convinced that we're going to see 490 Ethereum. It's going to be sharp, but I have my eyes on it. Personally, I'll be waiting to see it. Not that I want it, but it is what it is. And the reason why it is more likely now is because there are two things. One, there's the Ethereum merge, which is the upgrade on the network coming up in August. Two, this interest rate is going to be every 6 weeks. The last one was 5 points or 7, 50 basis points. This one was 75 basis points, highest in 40 years. Everybody is saying 100 basis points is the next. 100 basis points means 1%. That is gangster. And as the interest rate increases, it's like stabbing somebody again. The hemorrhage continues on the money markets. So I'm saying this, I mean, I don't want to be an happy year of bad news, but I'm saying this so that we'll brace ourselves. If a plane is going to crash, the pilot will say, brace yourself. Because if you don't brace yourself, you might actually be susceptible to more injury or death than if you're able to brace yourself in the appropriate manner. Because technically speaking, if you brace yourself in the manner that is recommended and you're not sitting too far in front of a plane, if the plane crashes, what it means is that the force of momentum that the plane is coming down with will be transmitted through your body and out of it very quickly before it causes any damage. I don't want to go into the science of it, it's physics, but the reason you brace yourself when the plane is about to land or crash is because you don't want the impact of the velocity of the plane that's been moving to be transmitted to your body. It's something we call the deceleration injury. If you allow, it's just like somebody that's involved in a car accident. When the car smashes into another car, because the car was in motion before and you are stopping it, everything inside the human body hits against the wall of the inside of the human body and the outside. So it's like you're smashing your organs against your body at that speed. So the impact of that is actually some of the things that causes the problem. So, but if you brace yourself and, if it's in the case of a car, you sit maybe tightly or something, or your seatbelt is on, it helps you to withstand the impact. That's the whole essence of the analogy I'm giving. So if you brace yourself, you understand what you need to do. For Ethereum, I think, personally, I would sell Ethereum now and wait till when it's at 500 and buy a lot more. When it hits 500, it's a good time to buy because I don't think it's likely to go lower. Like I said also, I think BNB is also a good buy. Where is that BNB? I think I closed it. I was going to show, let me see if I can load it. BNB is still going to come down a bit more, just like Ethereum, because Ethereum is the highest altcoin. So everything that happens to Ethereum happens to almost all the altcoins. So for BNB, this is what it looks like. So I'll be looking to $111 or $120 BNB as a good entry point. When it gets to that point, we're likely to see consolidation. The price is not likely to move beyond, way beyond. If it moves beyond, to just probably be, I doubt it to be, if you fall below 100, I very, very much doubt it. And that's because Ethereum actually has a lot more use case now than any time in its history. And they also have a strong ecosystem. They are gaining adoption in many countries. They're going around opening up. So I think they're going to get a lot of adoption. But I think we've not seen the bottom price yet. So the next question will be, okay, so what about Bitcoin? So a couple of things have changed in my assertions. I think this war is going to drag longer than expected. And I think this interest rate problem is going to be longer than expected. Because of that, we are in a death spiral of some sorts. It will eventually stop when everybody that wants to sell is out of the markets. But right now, not everybody that wants to sell is out of the market. So in times past, I've given you instances of, let me look for another. Okay, yeah, that's a better one. So let me put on the, I hope this indicators, yeah, okay. It's still there, yeah. Come on, my upgrade is not working. Okay, I wanted to show you the Bitcoin production cost and electricity cost. And the reason I wanted to show that is because right now we are trading way below the production cost of Bitcoin. We are trading at the electricity cost. Electricity cost is part of cost of production for Bitcoin. So what that means is that every small scale miner is selling at a loss and they're about to shut down. Some of them have shut down already, they've capitulated already. When all of them have stopped, it will be only the big miners that are left. And the big miners usually don't sell their Bitcoin. I've said this before. I think I said it severally last year. What big miners do is, because they have a lot of financial backing from hedge funds and VCs, they use Bitcoin as collateral, then they take long-term loans as their runway for financial operations. So they're usually very well padded. They don't see the heat. They don't see the heat when the market is bad. And because of that, they are major accumulators. How do I mean? They also try to accumulate when Bitcoin is crashing. And they try to buy up the Bitcoin that the retail miners or the small miners are selling. So this is what Bitcoin looks like based on FIB levels today. It doesn't look good, but because we've broken, and that was why I was so confident on 22, because I was like, okay, well, 22 was going to hold, and I felt there was no point. There was no point for anyone to sell below 22. But obviously, the market capitulation, and obviously the leveraged institutional investors as well, like Three Arrow Capital, have complicated the matter, because if an institution is leveraged, they're going to drag down a lot of things with them. So Luna liquidated, Three Arrow Capital liquidated, Celsius almost got liquidated. I think they're still going to get liquidated at this point. From this chart, the bottom is 10,756. Are we going to get there? I don't know. It looks very probable now because we've broken the last of the negative fibs. So it looks very probable on the weekly chart. I mean, and this is a weekly chart, so it's taking, when was this? It's taking 6 months to get here. So this might take another 2 to 3 months to play out. But my guess is if it comes here, it's probably going to bounce off. So some people have said 7K is the bottom. I don't think it's going to stay at 7K. 7K is somewhere here. I don't think they're going to stay at 7K because this is the floor based on Fibonacci levels. And usually the market will, on a very high time frame, the market respects Fib levels a lot. So I don't see Bitcoin dropping below this level, personally. it would be very good buying opportunity if it drops to this level. But frankly, I think the free fall is too much. I mean, it's still dropping. This whole week it dropped from 26,000 to 20K. That's almost 30% drop in a week. It's a long time we've seen those kind of drops. I mean, you saw those kind of drops here and here when we're getting up the peaks. So the picture is not looking good. No doubt, it's a very distressing thing to watch. But the advice I can give is if you have altcoins that are not Ethereum, you're best off selling them to USDC or BUSD or selling them to fiat and waiting for a couple of weeks more to buy lower. If you don't have, if you don't have need of money and you don't want to stress yourself, you can just hold it. I think the bottom this year is at those lines, are those figures that I've mentioned. I don't think they're going to go below that. For all the other coins, I mean, anybody's guess, they can go to zero. Like somebody was, I can't remember which coin somebody was talking about. He said he bought, oh, okay, somebody was telling me that she bought Kishu. She bought Kishu Inu with the profits she made from Shiba Inu. So, and I said, but did you hear me in November when I was saying that I was selling off my Shiba Inu and all the associated meme token? She said, well, she didn't attend the meeting. I said, oh, unfortunately, I did say it on a call like this, that I was selling off my Shiba Inu. And I explained in detail that day for anybody that can remember why I was selling off. And the logic is very, very, very straightforward. Shiba Inu had come from nowhere on the market cap table to show up in top 10. When you show up in top 10, you are either there to stay or you are there to mark register. You should know that now. Any coin that comes from anywhere to show up in top 10, if you are holding that coin, that is the time to take your profit and run like mad. If you don't run at that point, you're on your own. And that's exactly what's happened. People were like, yeah, I'm still going to hold SHIB. I said, well, you can hold it, but I've seen it happen before. And I'm sure this is going to, it happened for a coin that had more utility than Shiba. So I was like, there's no way Shiba Inu is going to stay in top 10. Like they say in Yoruba, there's no way it's going to stay in top 10 as a meme coin. So in a way, if you're holding other coins, if you don't mind holding them throughout for the next 3 years, that's fine. But understand that whatever crypto you're holding now, it's a long-term investment, and you should really consider your Bitcoin as property. You shouldn't sell your property. I'm just putting that out there. I don't know who is in distress and needs to hear it. You shouldn't sell your property. If you have Bitcoin, you shouldn't be selling your Bitcoin, please. It is digital real estate. The press might not want you to know it. The media might not say it that way, but that is exactly what it is. And the rich are buying it up right now. By the time people realize after the cycle is over, it will be too expensive for the common man to acquire. Ladies and gentlemen, I rest my case. I need to run today. Please, if you have any question, please unmute your mic. I'm happy to take a few questions before we call it a day. If you're on Instagram, you can type in your question. Otherwise, you can unmute your mic on the Zoom call if you have any question. In the absence of none, okay, I'll say thank you everyone for joining. We'll meet again next week by God's grace. If I have any updates to anything I've said, I will let you know either on the WhatsApp group or next week. But that's what it is for today. Thank you very much for joining and have a wonderful weekend. And don't be looking at your portfolio, of course. It's not something good to be looking at this point, so I wouldn't advise it. Thank you.